All right, what is going on, you guys? Welcome back to another video. First and foremost, happy Easter. Today is Easter Sunday. I hope you guys are all enjoying it if you guys do celebrate it. But as you guys can tell by the thumbnail, we are going to go over my favorite types of inversions, and inversions I believe that play out the most often and are the most consistent overall, no matter what your entry model is. We're going to start by originally just touching up on a few things such as for value gaps, inversion for value gaps, VPR, and then we're going to be going over just a few more tips and tricks before we jump into the actual charts. So with that being said, let's jump right into it. So first and foremost, we're going to have to know what these things are and what they represent in the market. And obviously, if you guys already do, you guys can skip this part. But starting off over here with fair value gaps. Okay, what is a fair value gap? It's just an imbalance in price, which is created by a 3 candlestick pattern. Okay, the first and third wicks cannot overlap. So over here, we have our bearish example. Okay, we have wick number 1, wick number 2, wick number 3, right? And do you see how wick number 1, starting here, and wick number 3 do not overlap? That creates an imbalance in price, aka a fair value gap. And then same thing with our bullish example. Wick number 1 starts right here, wick number 3 is right here. They do not overlap. Here is our imbalance in price, and this is an example of a bullish fair value gap. Now with inversion fair value gaps, we're still going to be using fair value gaps in 3 candlestick pattern, but it's when a fair value gap gets disrespected by closing above or below it, depending on which way we're going. So for a bullish example, we are going to close above the bearish fair value gap, and then for a bearish example, we are going to be closing below the bullish fair value gap. See how this candle closure is below the gap? If the wick, if it looks something like this, okay, this is not an inversion yet, just the wick has gone by it. We need an entire candle closure to close beneath it in order for it to be a valid inversion. And for BPR or balanced price range, it's just when 2 fair value gaps overlap each other, creating a strong area of liquidity. In my opinion, this is the strongest PD rate in the market. And not only do I use it as an entry model, but I also help use it to determine my bias. So again, here we have our bearish fair value gap right here, and we're gonna mark this just in yellow so you guys can see real quick. And then we have a bullish fair value gap resting right here, and we are going to mark this. Let's just do it in pink. Okay, our BPR is going to be the overlapping areas between these two, so it's going to be from the bottom of this wick to the top of this one. And I'll mark this in black so you guys can see. So this is going to be our BPR. Wherever this black rectangle is right here, that is going to be our balanced price range. Now when BPR is formed, we can expect price to come down, rebalance this general area, and then continue pushing in whatever way our second fair value gap is. So in this example right here, this is going to be a bullish BPR. However, if we do close back beneath it, that is a strong indication that we are possibly going to continue lower, more so towards this sell side liquidity resting right here. So that is how you can use it, not only as an entry model, but also help determine your bias with it as well, because you can use it on the higher time frames. So before we jump into the charts, I want to go over what do we need for a valid trade idea. We just talked about the first one, and that is going to be inversion for value gaps. That is going to be our entry model. However, we need 2 other things, and the second thing is going to be our higher time frame narrative. Okay, did we just tap into a higher time frame for value gap? Did we take out some areas of liquidity? All right, what is our higher time frame narrative, and what higher time frame PD array did we just draw into in order to send price the other direction or continue the direction that we are going? Okay, and the last thing is going to be a clear draw on liquidity. Data highs and lows, unfilled fair value gaps, 15-minute, hourly, 4-hour, daily, weekly, whatever. Okay, buy side liquidity, sell side liquidity, or low resistance liquidity, along with equal highs and lows, relatively equal highs or lows. Okay, those are considered clear draws on liquidity. So starting off with our entry models, this is the exact trade I took on Thursday, April 2nd, and I have an entire trade recap about this, and we'll go over why I wanted to take this trade. So first and foremost, let's start with our higher time frame narrative. Okay, coming into this morning, clearly these candles haven't showed up yet, right? This 6 a.m. candle is still fluctuating, whatever. But what do I notice? Well, I noticed to the left of us that we're inversing all these bearish fair value gaps to the left, right? Here's our fair value gap right here. All right, we have another one right here, spanning from right here to right here. And what are we doing? Well, we're just running right through it. And then on top of that, what do we end up creating? Well, we end up creating BPR on the higher time frames. All right, here's our BPR, bearish fair value gap, bullish fair value gap. They overlap. This is going to be a bullish BPR. So what can I expect price to do? Along with that, what are we doing? Well, we have our low to the high right here. And equilibrium is resting in this exact range of this bullish BPR. This 4-hour candle doesn't have a wick underneath it, so that's also a good draw on liquidity. So I'm expecting price to retrace into this general area, and then where can we possibly go? Well, towards this unfilled 4-hour fair value gap right here. All right, what else do we have? Come down to the hourly. There is an hourly unfilled fair value gap right here. And then what do we end up creating with this 6 o'clock candle, or with the between the 1800 candle and the 2 a.m. candle? Well, we create another unfilled 4-hour fair value gap, which is right here. At this point in time, when the trade idea before it played out, clearly my entry was down here, so this fair value gap was still unfilled. All right, so that was my general narrative for this trade, was Okay, cool. We just tapped into a higher time frame BPR. We came and rebalanced this leg. We missed it by a few points, but we pretty much rebalanced it to equilibrium. All right, now what are we seeing on our middle time frames? Well, I noticed this 15-minute intermediate low. Here's another fair value gap right here, right? 15-minute fair value gap with a low inside of it. What do we end up doing right at market open? Scale down to the 5-minute. Well, right at market open, where is our 930 candle? Our 930 candle is right here. What do? We leave relatively equal highs. Perfect. Awesome. We manipulate lower into this 15-minute intermediate low. And what do we end up creating? Well, we end up creating a 5-minute BPR right here. Why? What do we have? Well, we have a bullish fair value gap followed by a bearish fair value gap. Okay, so this is going to be a bearish BPR right here. And what do we end up doing? Since all my targets are higher, I'm leaning more bullish on the day, right? We just rebalanced that higher time frame narrative, tapped into those higher time frame PD arrays, which are all bullish. Okay, what am I expecting? Well, I wanted to see exactly this: manipulation lower at market open, take out some form of liquidity. We have clear draws above, relatively equal highs, unfilled gaps. Awesome. What do we end up getting to confirm this? Well, we get a 5-minute BPR inversion. If I assumed price was going to come down and take out this general area of liquidity right here, right, these relatively equal lows, well, I can assume this BPR is going to get respected, and we can see something like this, a tap into it and then continue lower, and then maybe something like this. But if we get an inversion of this 5-minute BPR, that is telling me, awesome, I already have all this other higher time frame narrative surrounding this trade. I'm already leaning bullish on this day. If we're inversing the strongest PD rate in the market to the upside and we have clear draws, well, price is most likely going to want to run to this general area up here, okay, and rebalance this entire move down. Okay, so what ends up happening? We end up getting that 5-minute BPR. Where do I put my stop loss? I put my stop loss below this last 1 minute for value gap, because I know if price inverses this BPR and then we come all the way back down here and maybe run through it, well, price is probably going to continue down towards here anyway, and then maybe we can see a rejection, something like that. So that was my entire thought process. Entered off that, got chopped around for what, maybe 3 minutes, and then where did price go? Right towards these relatively equal highs. Okay, we have this unfilled 4-hour. Let's go to the hourly real quick. We have this unfilled hourly right here. Let's go to the 15-minute. We have equal highs on the 15-minute resting right here as well. So it was a great draw on liquidity, along with our entire narrative surrounding this BPR inversion right here. All right, boys, look what just got here. Oh my God, I can't wait to finish this video and eat this. Oh, I'm so hungry. I haven't eaten nothing all day. DoorDash is the greatest invention of all time. All right, anyways, so jumping into this second example, we're going to kind of be using the higher time frames in this sense, but it still works. So if we come over here to the monthly, yeah, I know monthly sounds crazy, right? What are we doing on the monthly time frame? Well, we just tapped into this unfilled monthly for value gap right here. Awesome. Come down to the weekly, same thing. We have our weekly for value gap right here. We just tapped into it. So what can I start expecting? Well, if we have data highs from the previous day and relatively equal highs with data highs from the previous day as well, it's a pretty good draw on liquidity, right? And we just made this giant move down. Okay, we just hit some area of liquidity that can possibly send price higher. We have a clear draw up here. All right, but what am I noticing on the 15-minute? Okay, we have this 15-minute bearish for value gap resting right here. Yeah, awesome. But what do we also have? We also have this 15-minute bearish BPR that, as you can see, already came up and got respected, but this BPR is still in place. Okay, so if I'm really expecting price to run higher and higher, I want to see this BPR get broke first before entering a trade. So what ends up happening? We end up absolutely running through this 15-minute BPR as soon as we got the resweep of this low right here. Okay, what ends up happening on the 5-minute time frame? Cool, we end up creating a 5-minute bullish for value gap right here. What ends up happening? Okay, this bullish for value gap got hit before our draws up here got hit. We just created another relatively high. We have 1, 2, 3, 4, 5 of them. So after we got a tap into this 5-minute for value gap right here, or maybe we wanted to come down and tap into this and we start seeing a rejection, well, what am I looking for? Now I'm just looking for our entry model, right? And in this sense, it's not going to be a BPR entry. However, we got BPR down here confirming that, okay, maybe we are going to go higher. Now we're getting a slight little retrace. What are we taking? Our highest time frame inversion on the 1 through 5 minute time frame, which is going to be this 4-minute right here. We absolutely displaced through this. Here it is. Okay, cool. Our entry model can be right here. Now, if you want, you can go break even at this internal high or take full profits right here, or you can hold all the way towards these data highs and you're just going to be in the trade for a little while. And let's go ahead and see how this plays out. As you can see, it's overnight session, so it's dropping around a little bit. We're going to go to the 15-minute and we're just going to see if this plays out or not. Okay. All right, we're kind of getting edge. We're still in this trade. Again, it's overnight, so this is to be expected. But what is the ultimate draw on liquidity for price? Well, boom, ends up getting hit right here. And you can see as soon as we end up hitting that, we end up seeing some form of rejection. And at this point in time, we're probably going to chop around because what do? Well, we just created about a 560 point move. And after that move, what happens? Well, accumulation tends to come. All right, so for our first example, I'm over here on March 4th, and as you can see, the 10 a.m. candle has not yet opened, but there was some movement that happened down here that indicated that we were going to go higher. And what was that exactly? Well, we ended up creating this bearish fair value gap right here on the 4 hour, and it ended up getting inversed, but it got inversed into another bearish 4 hour, and then we started to see some rejection and we got an inversion back down low. So what is that telling us? On the lower time frames, we're probably just chopping around. This probably isn't the best of price actions. These candles aren't that big on the 4 hours, so there's probably not a lot of volatility there. However, prior to market open, this 2 a.m. candle, all of a sudden we see a giant diddy up. And when we see a giant diddy up, well, what do we have over here? Well, we still have this bearish fair value gap, and then we have a bullish fair value gap right here as well that got created, and this 2 a.m. candle just ran right through both of it. So we had a 4 hour BPR in here. We ended up running through that 4 hour BPR, and on top of that, we ended up running through this last 4 hour bearish fair value gap that was still holding, right? Because nothing has closed above this yet, so that means this fair value gap is still holding. Then we ended up getting a closure above it. With this closure above it, as you can see, the top of this wick never comes into this 4 hour bearish fair value gap right here, or this 4 hour BPR that is still untapped right here. And what do we know about higher time frame unfilled gaps? Well, price is most likely going to want to go and seek those out. So this is what the 15-minute chart looks like, and what can you see? Well, we ended up hitting the unfilled 4 hour, which is right here, but we never ended up hitting the BPR, and we left a relatively equal high with the entry point to BPR. So at this point in time, I'm thinking, okay, this is a pretty good draw on liquidity. If we get some form of rejection off this area towards there, we can go ahead and see it. And what else do we have? Well, the reason why we're retracing right now is just because we tapped into this higher time frame bearish gap, but again, we left this BPR, so again, there's still a valid reason for price to come higher. What do we end up seeing? We end up seeing a retrace into about 50% in this range. Okay, we also got a retrace into this 15-minute fair value gap right here. I'm sure there was an hourly in here somewhere. Yep, here is our hourly fair value gap right here. Ended up getting a retrace into there, balancing this leg out. Okay, and again, what is still left? This BPR is still left up here. Okay, so scroll over here, delete this, and after we hit, get all these lines out the way, after we hit this 1 hour fair value gap right here, what do we end up seeing? Well, we end up seeing some form of rejection higher. Where are we? We're over here. What do we end up getting? Well, you can either enter off of this inversion of these two 5-minute fair value gaps right here and go ahead and target this unfilled BPR. Okay, or you can wait for a retrace into one of these 5-minute fair value gaps right here that opened up, and then wait for an entry point out there. Now let's see if we ended up getting an entry out of this 5-minute. I don't know if we did or so. It looks like we could have entered off this candle right here. We're on the 1 minute. We inverse this tiny fair value gap. Entry point right here, stops at the swing lows inside of the fair value gap, and then we can go ahead and target what? Well, these relatively low highs right here that we can go ahead and target. We can target this 4 hour intermediate high, and then ultimately we can go ahead and target that 4 hour BPR. And as you can see, we ended up just ripping up for the next what, 15 to 20 minutes or so straight towards that area of liquidity. So with all of that being said, that is going to wrap up today's video. If you guys have any questions, comments, concerns, go ahead and leave them in the comments. I do respond to every single comment and I see every single one. But yeah, I hope I taught you guys something. I hope you guys can learn something. I hope you guys have a great Easter Sunday if you guys celebrate it, and everything you guys need is going to be in the description. All right, one-on-one mentorship, free Discord, money off your evaluations. Okay, previous videos to other strategy videos I have, all the links are going to be down below, so check that out. I hope you guys enjoy your day, and I'll catch y'all boys in the next one.